Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Bitcoin Investment Guide 2025: Risks, Rewards, and How to Get Started. Bitcoin has grabbed headlines for big price swings and stories of fast profits. At its core, Bitcoin is a digital asset created, stored, and transferred online, with no single company or government in control. Many people are curious about investing because it's unlike traditional money or stocks. But behind the hype are real risks, from extreme volatility to privacy concerns and changing laws. Before deciding if Bitcoin fits your plans, it helps to get a clear picture of both the possible rewards and the risks you might face. This guide will lay out what you need to know so you can move forward with confidence. What is Bitcoin and how does it work? To understand Bitcoin investment, it's important to know what Bitcoin is and how it operates. Bitcoin is more than just a digital coin. It runs on a clever system called blockchain that tracks ownership and every transaction. Here's what you need to know about its origins, the technology, and the process behind sending and receiving Bitcoin. A brief history of Bitcoin. Bitcoin started in 2009. Someone, or a group, using the name Satoshi Nakamoto, published a short paper, just 9 pages, that set out the idea for a new kind of money made for the internet. The main goal was clear: create digital cash that works person to person, with no banks or middlemen. Some key moments in Bitcoin's early story. The first Bitcoin software launches. People can now mine Bitcoin on home computers. The first real-world purchase with Bitcoin, a pizza, for 10,000 BTC, 2011 and beyond. News spreads. Other cryptocurrencies pop up, but Bitcoin is still the best known. Over the years, Bitcoin has moved from a small internet project to a main topic in business and finance. It sparked thousands of articles, millions of new investors, and a global debate about digital money. Understanding blockchain technology. At the heart of Bitcoin is the blockchain. Picture a public digital notebook that records every single Bitcoin move, in order, forever. No one can erase or change old entries. Anyone can check the notebook, so everything is open and public. Here's how the blockchain works in simple terms. Blocks. Groups of recent Bitcoin transactions are bundled together into a blockchain. Each block links to the one before it, forming a chain all the way back to the first block, the Genesis block. Decentralized. The notebook isn't kept by one person or company. Thousands of computers, called nodes, keep their own copy. All copies update at the same time when a new block is added. Because everyone has the same notebook and changes are locked in, it's almost impossible to cheat or fake transactions. How Bitcoin transactions are processed. When someone sends Bitcoin, the process is a mix of transparency and privacy. Here's what happens, step by step. Creating the transaction. You enter the amount and recipient's wallet address using a Bitcoin wallet. Broadcasting. The transaction is sent out to the Bitcoin network. This tells everyone, all those nodes keeping the notebook, what you want to do. Verification. Computers on the network check that you really own the Bitcoin you're trying to send. They also confirm you haven't already spent it elsewhere. Mining and confirmation. New transactions go into a block. Bitcoin miners, powerful computers, race to solve a tough math problem. The winner adds the new block to the blockchain. This step locks in the transaction and rewards the miner with new Bitcoin. Final settlement. After a few blocks are added, the transaction is considered settled and permanent. This system lets anyone, anywhere, send Bitcoin at any time. No need for banks, business hours, or a central authority. Key things to remember. Each transaction is open to the public. You can see amounts and addresses, but not real names. The process is built to stop fraud and double spending. The network never sleeps. Bitcoin transactions run 24/7 without waiting for anyone's approval. With this basic knowledge, you can better understand what sets Bitcoin apart and why people see it as a new way to store and transfer value. Why consider investing in Bitcoin? If you're looking at Bitcoin as more than just a tech experiment or headline grabber, it helps to know what stands behind the excitement. People choose Bitcoin for reasons that run deeper than the wild price swings. Its core features set it apart from both cash and stocks, and understanding these can help anyone rethink what's possible with money. Let's look at some of the major reasons why people are putting their money into Bitcoin. Bitcoin's limited supply and scarcity. Unlike dollars or euros, you can't just print endless new Bitcoins. There will only ever be 21 million. This hard cap is locked right into Bitcoin's code, and nobody, not even its creators, can change it. Right now, most of those coins are already out in the world, and the rest are being slowly released by a process called mining. What does this mean for investors? No inflation surprises. Governments can print more money, making what you have worth less. Bitcoin can't be inflated away. Scarcity creates demand. Like gold or rare art, a fixed supply can drive up demand over time if more people want in. Predictable schedule. Everyone knows when new coins will enter circulation, so there are no big shocks. This built-in scarcity makes Bitcoin unique in a world where most things can be produced on demand. Decentralization and its advantages. Bitcoin runs without a central boss or middleman. It's supported by thousands of computers, called nodes, all over the globe. No one group or government can shut it off, freeze your funds, or decide who gets to use it. Why do people care about decentralization? Greater control. You hold your own Bitcoin. No bank account or manager needed. No single point of failure. If one node goes down, others keep the network running 24/7. Open access. Anyone can join, anytime. No permissions or paperwork required. This setup levels the playing field. It removes barriers that many people face with traditional banks. Whether you're sending money to family across the world or storing part of your savings, you're in charge. Past performance and market growth. Bitcoin's price history shows major ups and downs, but the big picture is hard to ignore. Since its start in 2009, early supporters have seen dramatic returns, far outpacing most regular investments. A quick look at some milestones. In 2011, Bitcoin traded for just by 2017, it broke $20,000 for the first time. In 2021, prices crossed $60,000 before swinging back down and up again. People turn to Bitcoin for growth potential, even as they accept the risk of wild swings. It's become a focus for those who want something outside the stock market or who see value in a new digital asset. Key points to remember. Bitcoin doesn't guarantee gains. Its price jumps up and down. Long-term holders have seen strong results, but timing matters. Many people view it as a way to diversify beyond traditional investments. These factors, scarcity, decentralization, and bold market moves, help explain why many see Bitcoin as a new kind of store of value, even if it isn't always a smooth ride. Risks and challenges of Bitcoin investment. Bitcoin has changed how people think about money, but it's far from a sure bet. Anyone considering buying Bitcoin should pay real attention to its risks. Its price can swing wildly in a single day. There's a tug of war over how governments treat it, and keeping coins safe takes some homework. Knowing these challenges can help you protect yourself and make smarter decisions when investing. Volatility and market fluctuations. Bitcoin's price is famous for massive jumps and drops that can catch anyone off guard. Unlike stocks or bonds, the value of Bitcoin isn't tied to earnings or interest rates. It runs on supply and demand, news headlines, and even social media rumors. Sudden price changes. It's common to see Bitcoin rise or fall 10 to 20% in a single day. Market rumors. Tweets, government statements, or even rumors can set off big price moves. Thin trading. A big buyer or seller can push the whole market up or down because Bitcoin markets aren't as deep as traditional ones. If you put money into Bitcoin, expect wild price swings. These can lead to big wins, but losses often hit just as fast. Some investors enjoy the rush, but for most people, this type of volatility requires planning and strong nerves. You should never risk more than you're willing to lose. That wraps up part 1. We've laid the foundation, and in part 2, we'll get into investment strategies, risk management, and how to spot opportunities in today's market. Stay tuned for part 2. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.